Hey, good morning, good afternoon, good evening, whichever part of the world you are in, welcome to Crypto Gaga, a brand new YouTube channel where we bring you the latest in cryptocurrency news, developments, and analysis. Today, let's take a peek on what's going on in the market. Well, the market looks green. After the fall that we've had over the last few weeks, it's a welcome change. Bitcoin is up almost 1%. It's currently at 43,052. Most of the market looks green, and here there's a little bit of deep green at DOGE, and I wonder why. Let's hop over to our dear friend Elon Musk and look at his latest update. Tesla merge buyable with Dogecoin. Well, he's back. He's been quite dominant on the cryptocurrency space. Well, Elon Musk has been quite dormant as far as him tweeting about crypto of late, but it's good to see him come back. And with one tweet, we've seen Dogecoin soaring up almost 15% for the day today. Let's look at the overall market. The total market cap is at $2 trillion at the moment, and Bitcoin dominance is at 39.7. Why does this matter? Well, if you're an active trader, you always want to keep an eye on what's going on with the Bitcoin dominance, because that does to a large extent work as a compass for you on whether you want to place your money in Bitcoin or an altcoin, where the big money is flowing at the moment. I've seen a lot of people, even some of the old timers, OGs in the market, being very torn about whether we're currently already peaked in this cycle, or whether there is more to go in this bull market. I want to take a very objective view of this, okay, without any personal bias, and I want to evaluate a few things. Now, let's look at some of the arguments that we've had as far as the bulls are concerned, that hey, the market hasn't peaked. If you look at the prior peaks, this is 2011, this is 2013, this is 2017. As long as we haven't topped out here, probably the trend is still up, and maybe, just maybe, we can still continue up. Now, to give you a small example, if the later we touch this, these are levels, and these levels are dynamic. The later we touch the upper trend line, the higher we go. So for example, and I want you to mark this area, this is about 206, 200,000 plus area, and it's somewhere around, September, October. Now, why is this level significant? And why a lot of people have their eyes on that level still, despite this massive 40% correction that we've seen all the way from $69,000, down to sub $40,000. Here's another chart that I like to present, and I find this very, very fascinating again. This is the same chart, but these are fib circles. What I've done here is I've drawn fib circles from each of the peaks, market tops, cycle tops, to the bear market bottoms. Peak, bottom, peak, bottom. And what I observe here is that when I draw it from the peak to the bottom, 3.618 fib has acted as the peak for the next cycle. Isn't that amazing? Right? Okay. Now let's take the next cycle peak at 2013 down all the way to Jan 2015. Okay? And where does the next 3.618 fib take us? Wow. It takes us pretty much to the 2017 peak, the $20,000 peak. Following the same methodology, if I take the 2017 top to the 2018 bottom, can that possibly predict the next Bitcoin top? Currently, that figure stands somewhere around $200,000 plus. Could this be the beginning of the bear market? That's the big question. Is this a mid-cycle peak or is this the entire cycle peak? Now, there are valid arguments at both ends. If you look at the timing of each of the cycles that we've had, interestingly, this was, end of 2013, beginning of 2014, right? This is end of 2017. So this is exactly 4 years apart. This is exactly 4 years apart. And Bitcoin does have a 4-year cycle where the halving takes place every 4 years. And I've marked out the halvings at each of these intervals here. So these represent the yellow lines, represent the Bitcoin halvings. One of the other arguments that I've also seen is when I look at the chart and I look at the RSI, the relative strength index on a monthly time frame, for example, we've had double peaks of this. Whether it was 2013, we had a mid-cycle peak in April, and I'll show that to you on the chart. We had a mid-cycle peak in April right here. And it has very similar vibes to this mid-cycle peak in April of 21. Okay, we had a massive correction, and I want us to measure that correction just to get a sense of how much that was. While, on a monthly chart, it might look very trivial, but anybody who would have been invested there went down literally 80%. This was not a small correction by any measure. This was an 80% plus correction. But did the bull market end here? No, it did not. Even with that 80% correction, within the next few months, it recovered and ended this bull market way higher at $1,100. Okay? And it went down all the way. Where was this? Imagine from $52, literally 20x'd, to 1,100 plus. Could Bitcoin still do something like this? Well, if you look at even the parabolas, each of the parabolas were respected. The parabola that we draw out, from the bottom of the bear market, it was not violated pretty much till we peaked out. What I notice here is when I draw out a similar parabola here, it's still not violated. It still gives us room to even go down to as low as, for example, even if it were to drop today, it could go down to as low as 30,000 and still not violate that parabola. And could we still get the blow off top? So if you notice, each of these phases of the bull markets have had an initial, so this is the prior peak. We cross the prior peak. This is the mid-cycle peak, if you may, and then there's consolidation and a blow off top. Here, we see a similar thing. This is the prior peak. Okay. We cross the prior peak. There are multiple corrections that happened here, and each of these corrections were in excess of 30%. Good 30-40% corrections, each one of them. And then came the final parabolic rise that took it all the way to close to $20,000. A lot of people say that phase, that mania phase, the retail mania phase, is still missing. We've had one parabolic rise that took Bitcoin all the way, literally from $3,000, or let's say from $4,000 all the way to $65,000 here, and then $69,000. Is this consolidation or is this a peak? That is a big question. Now, this is what the bull case has been, that, hey, there's still a long way to go. I want to take a closer look and deep dive and see if the bull theory could possibly hold true. I looked at the charts of 2019 for Bitcoin on lower time frames. And what I see here This is still the same bull run. We're still in the same bull run, that started in December of 2018. So what I see here, and I will zoom out a little bit for you to get some perspective. Okay. This is the bear market, 2018 bear market. We made a bottom right here at about close to $3,000. This almost looks like a first wave, second wave, third wave, fourth wave, and the fifth as the local peak. Now, if I take a closer look at this, and if I zoom in, what do we see? We see an A, B, and a C. Now, in Elliott wave, a lot of people may argue, hey, how do you have a B wave that is higher than your third wave? Well, it is possible. And how is it possible? It's called the running flat correction. In a running flat correction, there are three waves down, A, B, C, right? And that's your A wave. Your B is actually higher than your recent third wave high, A, B, C. And then the C wave is completed again in five subwaves, 1, 2, 3, 4, 5. And then the uptrend continues. Now let's go back to our chart. We've seen Bitcoin do something like that in the past. Interestingly, even when I draw out some of the fibs do line up quite similar. Check this out. I drew out my fibs from here to here, top to the bottom. It gave me a 2.618 top, somewhere around that for my B wave. That's exactly what we're having right now. Then you see 1, 2, 3, 4, 5. If I zoom in, you get the subwaves here. Or even if you look at A, B, C, this is supposed to be 5 waves down. So it is 1, 2, 3, 4, and I think this is the fifth wave. Could we be doing something similar? Could we be doing something like 1, 2, 3, 4, and a 1, 2, 3, 4, 5? Well, very possible. And could this be the end of the consolidation and correction, which means that the uptrend could continue from here? Well, it's too early to tell. If you ask me, this is certainly a very strong possibility that we have to consider. But you see, there's a lot of work that still needs to be put in terms of, if you look at the dominant trend in the short term, it's been down. Okay, we made lower lows, lower high, lower low, lower high, lower low, lower high, lower low, lower high. What we need is a higher low, right, and a higher high. Higher high would take time, for us to get somewhere here. But it certainly does need to change direction, and for that, it will need time to consolidate. And we've seen something like that very recently. If you notice, when we came down from $65,000, down to, this was the $30,000 mark, sub $30,000, the reversing of trend does take time. And I won't be surprised if we spend a fair bit of time here consolidating before the trend can continue. Okay, that is one. Can it go down further? Technically, because this count is not 100% clear, it could even be 1, 2, 3, 4, 5, 1, 2, 3, 4, and then a 1, 2, 3. This could be a fourth wave, 5. What will that look like? Let me give you an example. This is an Ethereum chart. The same time that Bitcoin did what it did back in May, June 2019, this is what Ethereum did. And Ethereum, interestingly, if you look at the fibs, came down way lower. It came down to the 0.1 fib level. And it ran much, much deeper. So while Bitcoin, let's go back to Bitcoin. Bitcoin was pretty much, it's still held above the 0.786 fib, and 0.1 fib will be somewhere here in relative terms. but ETH actually went down way lower. And typically that's how the market also operates. Bitcoin does have a lot more strength, and ETH has a lot more elasticity, which means that when it goes up in an uptrend, it goes up higher, it goes on up in a multiple of Bitcoin. So for example, if Bitcoin goes up by 10%, in most cases, alts will run up higher. And similarly, when Bitcoin corrects 40%, alts could correct way, way, way more than 40%. So for example, even recently, most of the alts have been down 50, 60, 70%, and some even 80%, from their April peaks. Now this is the bearish argument. So far, we were looking at all the even these possibilities are actually short-term bearish, but in the secular trend, it does indicate that we still have the blow-off top in the fifth wave to go, which means that we could still continue higher, to complete this entire cycle. In both these cases, even the primary case that I presented, which is very similar to what we saw here in May, June of 2019, this seems to be playing out very, very similar to this at the moment. Okay, but we'll have to wait and watch on what Bitcoin does next. This is still bullish because if we do manage to hold these levels above the 0.786 or even above, let's say 30,000, there's still every possibility that we could go on to make, new all-time highs later over the next few weeks and months, as the case may be. So it's very important to keep a close watch at what happens here, and nobody has a crystal ball. We could still go back to the absolute low end of the range and crack that and continue in a bear trend as well. And now on that note, let's also look at very objectively a bearish view as well. Now a bearish view here is a fractal, okay, a price action that we have seen in the bear market of 2018. So the time period that we're looking at is April 2018 onwards. And look how similar the price action and the pattern has been over the last few weeks. This looks very similar to this. Even the peak pattern, is very, very similar. We come down, we correct, come down, we correct. But this goes deeper, okay? To give you an example, if I look at the bottom of this starting point, right here, where are we at the moment? We're pretty much somewhere here, right? Which means that we could still have one more flush down. It could happen that, a lot of retail gets excited here. We start putting a lot of fresh new bids here. A lot of longs get opened. A lot of leverage comes in again. And boom, stops get taken. A lot of liquidations happen. Very, very possible that we go down to visit this range one more time, flush out all the leverage, and then, go for a retracement. Now, this doesn't necessarily mean that we go on to make new all-time highs, because look what happened after this. This is the bear market of 2018, okay? So, and we saw a very, very similar pattern. And look what happened. We could not make any new highs after this. We did get this retracement, which is a very significant retracement. And I'm actually hoping that we get something very similar. Now, whether we get it from here or somewhere lower, we don't know that yet. But very, very clearly, I think even if this is a retracement, interestingly, I'll show you something. It's very fascinating. That even if, for example, if I measure it from here, it takes us to somewhere between 0.5 and 0.618 fib. So even if I take it from the current level, most likely, we should get something somewhere here. Okay, I'm going to change the color. Doesn't have to be red. Okay. So this would be a logical area where I expect that if we are in a bear market, a lot of shorts to open up. a lot of shorts to open up because they're expecting low prices later in the year. Look what happened here. We get this retracement and then the trend continues. We try again, down, 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 we push, and boom. Now this did not happen, in one go. We didn't go down all the way from, 8,500 USD down to 3,000. This did take a lot of time. This is July, and it took us another about 5 to 6 months before we made the cycle bottom. Could we be doing something similar? Very possible. And that's why I say, in a market like this, which is so volatile, trends could change very quickly, and the macro picture has been quite bearish. The truth is, the last 2 years at a macro level, the world's largest economy, America, has printed over 40% of its monetary supply, its M2 supply. The Fed has been quite clear about tightening of interest rates, and when that happens, it could be significantly bearish for the overall market. And not just crypto, stocks as well. And I do think that stocks and crypto at a macro level do go hand in hand. So while it's been fairly easy going because there's been a lot of liquidity being pumped into the markets over the last 2 years, especially during COVID, I don't think that's sustainable. The printing of money cannot continue till infinity. And therefore, at some point in time, you will see tightening. And when that happens, markets will consolidate. They will correct. And yeah, I mean, we could get into a bear market unless we're already in one, which means we're probably somewhere here. And the best we could do is wait for a retracement, book some profits here, and then, the trend could continue. So, well, I just wanted to, take a quick look at how I see the market at the moment, on what's going on. And tomorrow, I have something very, very special coming up where I talk about Bitcoin dominance and whether we're getting into alt season. And I do think that when this happens, this retracement is very, very significant. You know why this is significant? Because the last time that the markets peaked out in 2017 at the end of the bull run, it is during this retracement right here is when all the alts took off and made all-time highs. So for example, when Bitcoin peaked at $19,800, this time period when the retracement came in, this is the time when alts took off. And interestingly, even at that point in time, this entire drop was somewhere close to 40%, 46%. And what has been the drop so far? The drop so far has been 43%. So it's not an entirely invalid argument that this could well have been the local top of this bull cycle. And therefore, can we expect something like that? I think that a retracement, even if this is a bull market, is around the corner. Whether it happens here or it's goes down one more level lower, one more step lower, and that's not necessarily a bad thing, because even if you get that would be a very good time to pull out a long on BTC and most alts. And I do see that we're probably entering an alt season. Okay, and I will cover an entire episode on how do we identify an alt season. I'm actually very, very optimistic on alts at the moment at present levels because a lot of them have seen significant correction of anywhere between 60 to 80%, since April of 2021. So retracements here, much like, how the market operates. Every time Bitcoin goes up a certain percentage, alts go up in a certain multiple of that. Okay, so this possibly could lead to a very decent RR, risk to reward ratio, depending on where we head, whether we go to 50,000, 54,000, 57,000. These are significant levels to keep an eye on. I don't see us getting up here directly in one go. Probably even if we retrace, up, it'll be in waves 1, 2, 3, 4, 5. It's actually in ABC, but yeah. All right, so on that note, guys, thank you so very much. I really appreciate you taking the time, and especially if you made it till here. Please do leave me a comment on what you think. I'm very excited about this brand new channel. Please do show your support. Leave us a like, comment, and share, and follow us on Twitter. We listed on Twitter as Crypto Gaga 01. Thank you so much, everybody. I wish you a wonderful day. Till next time, take care, and I will see you soon. Bye bye.